Okay, so professors, when we talk of bank reconciliation statement, this is a concept that will help us to, appreciate getting the balances on two separate books to be equal. Okay, so the name bank there should suggest you that we'll be looking at transactions between a bank and a business entity or the bank's customer. So let me read the introduction here. It says the bank and its customers keep separate records of the transactions that take place between them. The bank keeps such records in a document called bank statement, whereas the customer also prepares a cash book. So, professors, the main themes here are that when you transact business with a bank, for example, GCB or ADB Bank, the bank itself will keep its records. And mostly the transactions we do with the bank are deposits or depositing valuables or money there and then withdrawals. Okay. So the bank will keep records of these transactions. The same way the customer would also keep such records. Okay. So it is expected that at any point in time, the records of the bank and that of the customer should represent the same information. But it so happens that sometimes the information presented by the bank and that of the customer are different, most especially the balance on the account. Okay, so that is the rationale behind the reconciliation statement we would be preparing. So the main theme here is that the bank is keeping a record called bank statement. And the customer is also keeping records called a cash book, specifically the bank column. And so we want to see whether the balance on the bank statement is equal to the balance on the cash book. If they are different, then we have to reconcile the two balances to make them equal. So that's the main theme of this topic. Okay. Now, to make it more, relatable, I think most of us use the MTN mobile money. Okay, so MTN keeps records of all the cash outs, the deposits that you do. Okay, whether you are buying credits or whatever, MTN keep all these records. Some of us also keep our own records as to how much I have received into my Momo, how much I've used to buy credits, etc. It is expected that the records I keep and that of MTN should be the same. But sometimes it doesn't happen. Okay, the more reason why sometimes we even go to MTN offices to print the Momo statement to check, because we are not too clear in our minds. We thought that, oh, somebody sent us this amount, and our balance is supposed to be this amount, but that's not the case, right? So that's the essence of the bank reconciliation statement. So by the end of the lesson, I expect that you can define a bank reconciliation statement. Okay, you can explain the reasons why the two balances disagree. Then we would write up or adjust the cash book as well as prepare the reconciliation statement. Okay. Please, any reaction based on what I've said so far? Prof. Amanda, you want to say something? Please, are we okay? Are we okay with what I've said so far? Okay, just for the purposes of, putting certain things in perspective. So the point I'm making is that, see, we are considering two entities, right? One is a bank and the other is the customer. Now the customer could be another business, an individual or another business, okay, or firm. So the point we are making is that the transaction between these two parties, be it deposits or withdrawals, okay, the bank will keep its records. And the name of the records the bank keeps is called the bank statement. So take note of that. The bank will keep records in the bank statement, whereas the firm or the customer would also keep records in the cash book. So we expect that the balance on that bank statement and the balance on the cash book should be equal. Well, if I say cash book, I hope you all appreciate the cash books that we were preparing, the double column and triple column, where we have the cash column and then the bank column. So here the focus is on the bank column because we are paying attention to the bank transactions. So we expect that the balance on that cash book bank column should be equal to that of the bank statement. Okay. But we are saying that sometimes, due to some reasons which we'll look at, these two balances disagree. Okay. So for example, you can have the bank statement showing a balance of 1,000 cedis, while that of the cash book is showing 560 Ghana cedis. Okay, so what we have to do as accountant is to investigate and know the reasons or the causes of this difference, and then we reconcile them either using this balance or using this balance to do the reconciliation. So that's the point I made about the introduction. Okay, now let's define a bank reconciliation statement. So when we talk of a bank reconciliation statement, it is a statement prepared, okay? It's a statement prepared to bring into agreement, okay? Bring into agreement the balance on the bank statement and the balance on the cash book. Okay, so what you have here is a statement prepared by a customer. So it's the customer that prepares the reconciliation, not the bank. It is the customer who prepared it. To bring the balance of the cash book bank column into agreement with the balance on the bank statement. That is a bank reconciliation statement. Now, what is a bank statement? And I think I've hinted that this is the record kept by the bank. But what are the specific details in this bank statement? So it's a record of the balance in a bank account and the amounts that have been paid into, okay, the amount that has been paid into, or technically we say deposited, the amount deposited in the account as well as the amount withdrawn from it. Okay, and I don't know if any of you has ever transacted business with a bank and is aware of this bank statement I'm talking about. If any of you has such experience, you can share with us. A particular bank you have an account with and you've gone for statement before. Of Alexia, Amanda, Adeladem, and Edem. Do you have experience with printing out bank statements from banks? Prof. Edem, you have any experience in that regard?
No, please.
Okay, no problem. Well, within the course of the lesson, we'll see this bank statement, or I'll show you a picture of it. But for the cash book, is the normal cash book we know, right? Okay, so that is a bank statement, and let's look at the purpose of bank reconciliation. Why do we have to do a bank reconciliation? Okay. So a bank statement, bank reconciliation statement is prepared one. Okay. So I hope professors took notes of the definitions that we looked at few seconds ago. Okay, now the purpose of a bank reconciliation statement. Why do we do that? We do that because one, we want to check the accuracy of the cash book. Okay, we want to check whether there are no errors in the cash book we have prepared. Because if there are errors, definitely during the reconciliation, we will detect those errors. So it's to check the accuracy of the cash book, as well as also to check the accuracy of the bank statement. Remember that these records are kept by human beings, right? It is human beings that put in the data into these records. So there's the possibility of errors or mistake. The third one is to check if there are no unnecessary delay between payment, receipt, and the bank clearing them. Okay, now let me speak more about this point. So, for example, if you take a check to a bank, for example, the check is for GCB, but you are paying it into an ADB account. What happens is that it takes time for such check to be cleared. When I say the check is cleared, it means the amount there has been, disbursed or paid to whoever is supposed to be paid to. So if a GCB bank check is being paid into an ADB bank check, it takes some time. Why? Because it has to go to a certain department we call clearing house. Okay, so they normally take delivery of all these checks and then they do a reconciliation. So, for example, if GCB Bank is having about 20 checks in the clearing house and ADB is also having like 15 checks, they compare the two, right? And then the net figure is paid. So it's not like every check money has to be transferred. The clearing house ensure that they see the net balance of the checks of these banks so that they can pay the net balances. I don't know if what I've said makes sense. Let me say, for example, Prof. Amanda is, say, GCB, right? And Prof. Deladem is ADB. Now, Deladem has some checks of Amanda with her, and then Amanda also has some checks of Deladem with her, right? So instead of sending the money, they will say, okay, I have my checks with you, you have my checks with you. Let's reconcile, or let's do a comparison and see how much should be paid to whoever. So if the check with Deladem is 1,000 and that of Amanda is 750, then what it means is that Amanda would have to remit the balance to Deladem, right? So that is how or what happens at the clearing house. So mostly, if you pay a different bank's check into your account, it takes I think a maximum of 48 hours, right, or 3 business working days before it can clear. You can find out some of this information from your parents, and I'm sure they will tell you. But if it is the same bank, like ADB, you are depositing ADB bank's check into an ADB account. That one is straight away because it's the same bank. But if it's interbanks, It has to go through the clearinghouse, and it takes some days for that to be done. Okay, so that is just by way of. So the reconciliation would help us to know if payments are being delayed or if checks are being cleared on time. Okay, because if we are paying our suppliers, we want them to receive the money on time. The next one is to find out if the bank got any payment and receipts that weren't recorded in the cash book. You see, this happens sometimes. People deposit money into your account and you are not aware. It could be your customers or debtors who have made such direct payments, but they didn't inform you. So it's during your reconciliation that you know that, okay, this person has paid. I think it even happens to us when your Momo account is credited and you don't know who credited who made such deposit into your account until you do investigations or try to reconcile the issues in there. Then finally, it reduces the chance of fraud, right? By account staff, yes. If the accountant knows that investigations will be done to see or to check the accuracy of the records he is keeping, I'm not sure he would engage in any form of fraudulent act. Okay, so these are the purposes of bank reconciliation statement. Now we come to a very important point, that is the reasons why bank statement balance and the balance in the cash book may disagree. Before we look at that, I want us to do this. Professors, it can happen that today you check your Momo balance, it was 150 Ghana cedis. So that is what you know, that, oh, as for my Momo, I have 150 cedis. The next couple of hours, you go and check, and your balance is 120 cedis. You see, you get worried and say, what happened? MTN has stolen my money. I don't know if you have ever experienced that. Okay, but that tells you that there are possible factors that can cause the two balances to disagree. So I want to find out from you, what are some of the things that you think will happen for your Momo balance to be different from what you know or what you have in your records? I need reactions from my professors. What can cause your Momo balance to either increase or decrease from the original balance you knew? Because sometimes you say, oh, I have 100 cedis in my account. You go and check and it's 98. So what causes that difference? Should I mention him? Prof. Amanda. Okay, I see something in the chat. Deductions of credit purchases or airtime. Okay. Deductions of credit purchases or airtime. Okay. So maybe you bought some airtime. Okay. Interesting there. That was from Prof. Adam. Prof. Amanda, please share with us what you think are some of the reasons why your Momo balance will be different from what you knew. Please feel free and share your opinion, okay? Prof. Amanda, we are waiting for you. Oh, it seems today my professor's morale is down. Prof. Delade. Okay, if someone has access to your PIN and cashes out the money. Okay, that is from Amanda. So, Prof. Delade, What do you have for us? Okay, so all the points you make are valid, but let's look at specific causes. So one of them could be that your parents sent you money, but you are not aware. Okay, I see unauthorized withdrawal. So it's possible your parents sent you some money, but you are not aware or they have not informed you. So you see that you will be seated thinking that, oh, I have 100 cedis in my account, but your parents have sent you money without you knowing. And so maybe your balance is now 300 cedis and not 100 cedis. So that is one example. Two, the airtime deductions that Adam spoke about. It's possible that you have done an automatic renewal of certain mashup packages. So some people do it monthly. So at the end of the month, MTN will deduct and then do that mashup package for you. Okay, so you might have forgotten yourself that you are doing such a package. Okay, so you are there thinking that you have 80 cedis, you check and then, oh, 10 cedis have been used for mashup, right? Or automatic renewal of some mobile bundles. Okay, so that's also another cost. The other one will be charges from MTN. Sometimes MTN will charge you 5 pesos or 50 pesos for certain transactions. And sometimes they also give us interest. I don't know if any of you have received interest from MTN before. The last time I received one, I only had 3 cedis. Yes, 3 cedis. So for the whole year, 3 cedis interest for all the transactions I've done on my SIM card. It was very fun. Okay, so you see that these are some of the possible causes of the difference in the balances that we are looking at. Now, specifically, let's go to that of the bank and then the customer. So please take note of the following reasons. The first one is unpresented checks. Unpresented checks. I would have wished that one of my professors read what is under unpresented check for me. Whoever will do that for me can do so. Unpresented checks. Please read what is there. Time. So whoever would volunteer.
Unpresented checks are checks that have not